Hi, this is Elliot Eisenberg of Graphs and Laughs, here to catch you up to date on the latest in residential sales data in both Hillsborough and Pasco counties. And inventory continues to be the story here. Your inventory is down by about 2/3 the national average. Yeah, it's down 150 to 200% year over year, but it's still just 2.2, 2.3 months of inventory compared to 3.3 nationally. This reduced level of inventory is keeping pressure on prices, despite the fact that prices are very high by historical standards, and despite the fact that interest rates are very high. So in Hillsborough County, single-family home prices are up 10% year over year. In Pasco, it's 20%. In Hillsborough County, multifamily median home prices are up 20%, and in Pasco, they're up 40%. And in Hillsborough, the average prices for multifamily are up 70-80% because there are some very expensive multifamily units that are coming online. This combination of very expensive multifamily in Hillsborough and, generally speaking, not much inventory is keeping home prices appreciation very strong, surprisingly strong. Very important to keep in mind. That said, sales activity is clearly weakening. It's down about 30% across the board, except in Pasco County, multifam, where it's flat. And if you look at pending sales activity, it's down everywhere. It's down, but it's down less on the multifam side in both Hillsborough and Pasco compared to the single fam side in Hillsborough and Pasco. If we look at sales price to original list price, it's declined in both Hillsborough and Pasco, a little bit more in Hillsborough than in Pasco counties. So you put this together, and you can clearly see that things are weakening. They're weakening a little bit more on the single fam side in general than multi, and a little bit more in Hillsborough than in Pasco counties. If we now turn our attention and look nationally, Q1 and Q2 of 22 were lousy, but Q3 was really strong at 3.2, and Q4 will probably come in at 1.5 to 2. The key thing is that from Q3 to Q4, there was weakness, and I think that weakness continues going into 2023, leading us likely to a recession in the second half of the year because of all the interest rate hikes that the Fed's already done and they're going to do going forward. Now, the good news is inflation is certainly slowing down. It's too high, but it's slowing down, and as a result of that, the Fed's not raising rates as fast as it was. It was raising rates until recently in 0.75% increments, then most recently in 0.5 percentage point increments, and now for the next couple meetings, 0.25 point, and then they'll probably stop. Because what's going on now is no longer the fear of inflation. The fear of inflation is coming down. What's now driving this situation is the fear of recession. The good news for housing in all this is interest rates have come down as a result. We're not seeing 7% anymore. That's it. That's history. That was a short-term thing, and it's gone. Interest rates have come down quite meaningfully. The thing that we have to be concerned about, however, is the fear of recession. And I think going forward, the fear of recession in the second half of 23 is pretty strong. So I want you to really focus on that, carefully plan your business accordingly, and keep it uppermost in mind. I look forward to seeing you next month.